Now, so the attacks on the Saudi oil facility sparked a massive fire at a crude processing plant essential to global oil supplies. The closure impacts 5 million barrels of crude processing per day, affecting 5% of the world's daily oil production. Let's bring in Analyst View. Joining us via Skype live is Rob Thummel, Managing Director of Tortoise Capital Advisors. Rob, welcome to the program.
Thank you.
Now, first of all, some analysts have said that the now high risk premium and the sudden elimination of spare capacity adds a potential of $5 to $10 premium to oil prices. What is your projection of oil prices from here on forth?
Yeah, Tortoise, we would agree. This was a significant event, and we do think that there was really no geopolitical risk premium in oil prices, but now there needs to be. And so $5 to $10 is right in line with what we think the geopolitical risk premium will be going forward. However, we don't expect oil prices to escalate significantly higher from here. We have plenty of inventory across the world, and the goal is to keep oil prices lower going forward so that we can avoid having this particular event turn into a global economic crisis. And we don't think it will. We think there's ample supply of oil, and that oil prices will stay range bound in the $60 to $70 range going forward from here.
Right, Rob. Saudi officials had said that they were racing to restore a third of their disrupted output within weeks. Now, some are saying that it could take months. Will that affect the global crude oil supply chain?
Yeah, so the biggest thing to watch in crude oil and the strongest correlation is between oil inventories and the crude oil price. When inventories fall, often the price rises. So what's going to happen is if Saudi takes a little bit longer to bring a significant amount of oil back online, supplies will still be there, but inventories will start to fall significantly until those inventories can be replenished. So if the crisis and the repairs take an extended period of time, you will see upward pressure on oil prices. But we think that when you get back to normal, oil prices will stay in that $60 to $70 range longer term.
So 60 to 70 range. Now, what are some other factors that further threaten the situation? I mean, President Trump appears to believe that Iran was behind the attacks on the Saudi oil plants. He said that the U.S. is locked and loaded. The risk factor of a conflict there, could that add to a rise of oil prices, perhaps even further upward than 60 to 70 range?
Well, yeah, things like that would escalate prices. But I think it's important to understand President Trump wants lower prices. He's been on record for trying to boost supplies of oil so that commodity prices and oil prices stay lower. He wants lower gasoline prices, and we can get there. I think it's really important that we sustain low energy prices across the world. Now, that would have been a much bigger challenge years ago, but the fact that the U.S. has doubled oil production in the last several years sets the world up in a much better position than we've ever been. We can have disruptions like this, but yet keep commodity prices from significantly escalating. So I think what you'll see going forward is escalate higher oil prices, but the oil price is not going to get out of control. Gasoline prices are not going to get out of control. President Trump will do everything he can to prevent that.
Now, moving on to this part of the world, how would the Saudi Arabia oil field attack impact Asian economies? I mean, as far as South Korea is concerned, Saudi Arabia is the biggest crude supplier to this nation.
Yeah. So when you look at I guess to put it in context, if you look at the Saudi oil exports, they export about 8 million barrels a day. Half of those exports go to Asia. A lot of it goes to South Korea. A lot of it goes to China. A lot of it goes to Japan. And some of it goes to Taiwan as well. So it's important that customers like South Korea continue to receive the oil imports that they've historically received from Saudi Arabia. Now, Saudi Arabia has existing oil inventory. They will draw down those inventories, continue to be a supplier to South Korea, to Japan, to China, and other regions in Asia. But if the duration of this conflict lasts, or this challenge with getting oil supplies back up and running takes longer than expected, South Korea and Asia will need to look for other sources. Once again, the U.S. is well positioned to provide additional oil volumes and transport those volumes if necessary. Other areas in OPEC as well can help fulfill supply constraints, places like Kuwait and Iraq and other areas within OPEC as well.
Now, Rob, do you think the U.S. will rise to this occasion and perhaps become the next biggest or the bigger supplier of oil to Asia?
Yeah, well, we'd hope so. Longer term, yeah, absolutely. We think the U.S. is well positioned. The U.S. is already the largest producer of oil in the world. We think the U.S. is becoming a major exporter of oil to the rest of the world. And we think Asia is a fantastic spot for demand. And as demand for Asia, from Asia for additional supplies of oil grows into the future, we think that the U.S. will be a supplier. Asia, and this is really paramount as a result of this, Asia probably wants to diversify its sources of supply away from just Saudi Arabia. So the U.S. is a reliable source of crude oil going forward. And so we think that this is a significant opportunity for U.S. oil producers, not just in the next couple of years, but in the next several decades.
Right, so in the longer term strategy as well. All right, Rob Thummel of Tortoise Capital Advisors, thank you so much for your insights today. We appreciate it.
Thank you.